Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, a judge in New York has ruled that Trump has committed fraud by inflating real estate values that he owns, and therefore being able to apply for loans at much lower interest rates than they usually would be, and therefore, committing fraud. As well as that, crude oil has climbed above the $696 mark per barrel of oil, and therefore, is reaching ever closer to the $100 a barrel oil mark. And this comes as US oil stocks dwindle. Reserve stocks dwindle. As well as that, we've got lots of stuff happening on the charts, with US indices falling off yesterday. As well as that, we've got lots happening on the economic calendar with lots of data coming out today, but we'll come to the charts and data near the end, so stay around to see that. But let's get straight into it. So Donald Trump committed repeated fraud by inflating real estate value, New York judge rules. Now, a New York judge ruled that Donald Trump and his eldest sons, as well as his business, orchestrated a persistent and repeated fraud in which they vastly exaggerated the extent of the former president's wealth to procure favorable loans. Sorry about that. But basically, this is coming on top of already, the charges which Donald Trump is facing in relation to, his rejection initially of the 2020 election results, as well as, other issues around his, own finances. And this is all in the lead up to next year's presidential campaign, where obviously Donald Trump seems to be the leader at the moment in the polls, with no real person to go up against in the primary. So it does seem that it'll be Donald Trump versus Biden going into next year. So it'll be interesting to see how this plays out within it. Now, the Trump organization inflated the value of properties in Manhattan and Florida, as well as golf courses in the US and Scotland. And this comes, by the hundreds of millions of dollars. So serious cash we're talking about here. Now, there's been no official ruling so far, however, on the matter, with assets such as flagship Trump Tower's status still unknown. So it's still not sure what the exact ruling will be on this, what assets might be seized, and what extra charges may be levied on top of this ruling. Now, the ruling is the latest development in the case brought by the New York Attorney General Letita James in 2024. Sorry about that in 2022. Sorry about the pronunciation. Which is due to go to trial on Monday, with the trial determining whether further financial damages and the matter of whether defendants were also liable for issuing financial statements and insurance fraud. So also looking at the people around Trump to see whether they are available to be convicted of something. Now, Trump commented on the matter saying, the ruling was a terrible reminder that the radical left Democrats will stop at nothing in to prevent him from winning office again. And this is, in the lead up to next year, where now Donald Trump is, essentially laying out and making his point known about how he believes that basically this is once again a political attack on him by the one sector of government, that being, the law and order part of government, the judicial system, where he now argues has political biases which are fighting him in, his possibility of running again for president. Now, the long-running lawsuit brought by James's office alleges that Trump and his business inflated the value of assets by more than $2 billion in total to obtain hundreds of millions of dollars in loans on favorable terms. Now, the Attorney General is seeking to recover $250 million in damages and attempting to bar the defendants from ever acting as an officer or director of a corporation in the state again. So this would be essentially wiping out all of Trump's executive, including himself, from ever being able to run a company again, therefore ending, Trump's history as being a corporate and business tycoon, obviously. Now, this all comes in addition, as I said earlier, to the 4 separate criminal indictments over the matters, including the retention of classified documents and the subversion of the result of the 2020 election. Now, lawyers for Trump's, including Kissy, a former Solicitor General of Florida, were fined $7.5 thousand each by the court for apparently repeatedly making frivolous arguments. So, not making any arguments of interest or actual substance. Now, with the judge also dismissing arguments made by Trump's lawyers that the banks in questions were not defrauded, as the loans ultimately were repaid in full. And now the reason why, this is still considered a matter of fraud is because of the fact that if he had less collateral to offer to these banks when he did apply for these loans, then ultimately he would have higher interest rates on those loans, and therefore he would have paid the banks more, and therefore the banks would have earned more money. However, Trump and his organization essentially is saying, look, the point is, we did everything legally in terms of paying them off. We paid the loan that we took out, and property values are somewhat subjective and volatile based on the market, and therefore there's no issue that's really arose here. Now, the judge ruled that Trump had overvalued his Trump Tower apartment by up to $207 million, stating that it was almost 3 times its actual size. So, serious statements and accusations being made by the judge. And Agoran further found that Trump's Mar-a-Lago resort had been inflated by at least 2,300% compared to with the appraiser's assessment. But that's all for Trump. Keep this in your mind going into next year when we do have, the presidential election, and this is obviously going to be playing into any volatility on, gold, as well as the dollar, as well as any US equity markets, because obviously politics plays heavily into the markets. But next to talk about really is crude oil, which has climbed above $96 a barrel on US stockpiles concern, and we'll come to the actual charts in relation to crude after this article, so stay around till then. But firstly, oil prices surged nearly 3% to a fresh 10-month high on Wednesday, approaching $100 a barrel. And this is kind of in relation and following what we've spoken about a lot recently, which is Saudi Arabia and Russia's attempt to basically achieve a $100 a barrel mark. And some have argued this for political reasons, some argue for financial reasons and investment reasons and that sort of thing, but ultimately it's undecided on why this actually is the goal for those two countries. But ultimately these two countries are oil rich nations, with Russia being sanctioned. It doesn't have as much of a bargaining chip, but especially with Saudi Arabia, it's on the west side. However, it's looking to push for a higher level of oil prices, and they're doing this generally by restricting supply just like Russia is right now as well. This comes as a result of lower than expected US stockpiles, which have added to concerns over the impact of tighter global supplies of crude oil. Now, Brent crude oil reached $97.06 a barrel, which is its highest intraday level since November 2022. So, really making new highs here, and we'll come to the charts to show this really in a second. But obviously recently we saw some consolidation, some retracement by oil, but it does seem that this data around US stockpiles has really driven its now extra rally to the upside, with recent data showing commercial crude oil inventories falling by 2.2 million barrels from the previous week, further tightening supply, while the delivery point for WTI saw inventories fall to the lowest point in more than a year. So serious reductions in supply, I guess, which are driving prices higher. According to Oil Hansen, which is the head of commodity strategy at Sazo Bank, the price correction we saw last week has run out of steam and market momentum is pointing to higher prices. And this is what I was speaking about, last week, which is in relation to, when we saw oil kind of consolidate, retrace a bit, and it does seem that that lost steam, and now oil's ready to push higher once again. Liquidity may have been, punched, and now we're looking to head to the upside. And this all comes as oil prices have been skyrocketing, as I said earlier, and the S&P 500 also saw a fall to the downside by 0.4%, as well as the Nasdaq falling 0.3%. Now, this came as a result of US equity markets being put under pressure as US government bonds extended their sharp sell-off from early in the week, which was prompted by the Fed's hawkish guidance. And we've spoken a lot about this, but essentially the Fed did not raise rates in its decision, however, kept rates where they were and spoke of possibly raising rates later this year, talking of issues around inflation, a hot economy, and looking to possibly raise rates to deal with that. This drove a lot of money into the dollar, with the Bank of England not raising rates and actually talking about ending its rate hiking cycle, and similar rhetoric from the ECB all drove more and more money into the dollar, driving it to new highs. And we'll come to that on the charts in a bit, but basically it does seem that the dollar is becoming a bit of a safe haven asset as global markets are waning. Now, with yields on the US 10-year bond rising 0.03% points to hit 4.59%, as well as hitting a post 2007 high. So serious gains on US yields as well. Now, the durable good orders also came in above expectation. To comment on the rise in yields, obviously we need to remember that bond prices inverted to US yields. So obviously if bond prices are going down, yields are going up. So this is kind of talking of bonds are actually becoming less demanded for because more money is going into the dollar, and therefore yields have gone up as a result. Now, durable good orders also, pardon me, by the way, the durable good orders also came in above expectation, rising 0.2% in August, which is an improvement from 5.6% contraction in the previous month, and above forecasts of 0.5% decline. So clearly beating expectations. And this this piece of data generally is used to kind of take a look and see what the US manufacturing kind of system is like, and how are they doing production wise. And so with a high durable good orders level, obviously production is likely to be higher, therefore stronger economic growth, and therefore likely stronger inflation. So take that into account as well. And now once again attention is turned to the US and Eurozone inflation data later this week, and we'll talk about that on the economic calendar near the end as well, so stay around till then. But next to talk about really is the market and the charts, with firstly US indices being in an interesting position after still continuing to fall following the Fed's guidance around rate hiking cycles last week. Now, we obviously saw this fall off on US indices, but ultimately yesterday it does seem like it was able to fall off but then tick back to the upside. So it does seem that it was able to punch some liquidity around this area. It doesn't really seem like there is any significant area, but it does seem that liquidity is being found due to this large bullish movement, engulfing, not really bullish engulfing, but a strong bullish candle to the upside, once again returning to this prior area of liquidity. But it'll be interesting to see how far US indices may retrace now, especially with the Dow Jones being in this interesting position. But also to talk about is the Nasdaq, so still US indices, but ultimately it saw this likewise move. And we spoke about before, the break below this area of liquidity, this prior low on the Nasdaq, and it does seem like it was able to retest and then move to the downside once again. But with this bullish movement coming in today, it's kind of pushed back into this area of liquidity. So it'd be interesting to see where it now moves from there. Let's just draw out this real quick. So yeah, it'll be interesting to see whether it will stay within this channel maybe fall off once again from this area of liquidity, or in fact it will break the trend and move higher to possibly retrace to a point like the 38% Fibonacci area. And that's likewise on the S&P 500. But next to talk about really is the dollar, which is pushing for new highs, still coming off the back of last week's Fed's guidance, as well as the more recent and yesterday's US stockpiles data in relation to oil. So it does seem that dollar is making greater and greater gains. And if you just look on the charts, this is super strong upside moves. Strong upside moves not seen since November 2022. So it'll be interesting to see what levels the dollar can really reach here. But moving on from the dollar, we've also got pound yen to talk about, which obviously broke out of this channel, moved down and then moved back up, retracing after reaching liquidity, and kind of has fallen off a bit. However, we were kind of looking at pound yen to now, after punching this area of liquidity and hitting the 50% Fibonacci area, we were kind of looking at it rolling off and moving down to areas like the minus 27.2 Fibonacci extension area. However, it does seem that it's consolidating a bit, so it will be interesting to see whether it will continue to make lower highs and lower lows and possibly move down to this Fibonacci extension area. But obviously this area of liquidity does have some strong support, as evidenced most recently on the 21st of September. But that's all for pound yen. We've also got US yen to talk about, and that's mostly in relation to the fact that now on the RSI it has punched above and reached overbought levels, and this is in relation to dollar strength, obviously, but it is an interesting position really, because it's now reached this Fibonacci extension area. It does seem that it's taken a turn, possibly it's ready to move to the downside now. It's broken above the RSI's 70%, and it will be interesting to see now whether it will actually take a fall to the downside, maybe in the the yen session or in the US session today. But that's all for the USD JPY. Next to talk about really is gold, which has fallen far lower. Now, I know yesterday we did speak of potential bullish areas around the 78.6% area, but it does seem that the strong gold oil news in relation to US stockpiles, which has driven oil higher. It does seem that now oil is looking to be a better asset to hold your money in as a commodity rather than gold, which hasn't presented as greater returns, and therefore we're seeing greater moves to the upside in relation to that. And with that, gold has fallen off greatly, now breaking below prior lows made on the 21st of August 2023, and these levels now haven't been seen since March 2023. So serious declines for gold recently, but it'll be interesting to see now whether it may come back up, retesting these prior lows if it is to move further lower. But that said, we are moving into underbought territory here on the 4 hours chart. But next to talk about really, of course, is US oil and Brent crude oil. But firstly, we'll talk about US oil, which has obviously made new highs here, reaching 93.7 on the charts. And this came after, as we spoke about, this area of liquidity being punched. This was an area where price found a lot of resistance on the way up, and this was halting the long period where oil was pushing to the upside, and it managed to hold it at that level. So we knew that was an area of significance where likely there was lots of buy orders. So it did seem unsurprising to us once it came near the 61.8% area, and punched this liquidity, and now it's moved and broken above these prior highs. If I put on the Fibonacci extension real quick, this would be an interesting area to see whether it can reach that, just based off the Fibonacci movements. But next to talk about really is Brent crude oil, which now has neared this double top. Although it has broken above, it does seem to be encountering some resistance And so it'll be interesting to see whether it will still be able to move higher based on the recent US oil stockpiles data which did come out, as well as the rest of the geopolitical news around Saudi Arabia and Russia cutting their oil supplies in order to reach the $100 a barrel mark. And this is really the target for those two countries. But we'll be able to understand and be like, yep, we're probably on the route to see that once we do break above this prior high, seriously, not just wicking above slightly, but seriously breaking above and possibly retesting to move higher. But that's all for the charts, really. Next to talk about, of course, is the economic calendar, with lots of data coming out today, which we need to talk about. So as we can see here, firstly, we've got the ECB's General Council meeting as well as their economic bulletin. So obviously lots of important rhetoric from the ECB in relation to the euro. Along with that, we also have Eurozone consumer confidence and economic sentiment. And this obviously all plays into inflation predictions, because if consumer confidence is high, it's likely that spending and consumption is high, and therefore it's likely that inflation will rise as a result of increased aggregate demand. And so keep your eyes on that. As well as that, we've got German inflation rate. And obviously Germany is the strongest economy of the EU and therefore always has the most significance in relation to the Eurozone. Therefore, it's important to have a look and see and understand what German inflation is like, to start to see how the ECB may shape their monetary policy, as well as their inflation rates which may come out soon. Now, as well as that, we've also got USD GDP growth rate, which obviously also plays into many different things around the Fed's policy, as well as US continuing jobless claims figure, as well as, which obviously is in relation to US unemployment, as well as US core PCE prices, which is a quarterly figure, as well as numerous Fed officials' speeches. So we've got lots coming out today, lots of economic data. I hope I've given a good rundown of the most important articles of the day, as well as that, we've had a look at some important areas on the charts. So I hope you have a great trading day. That's all from us at Wildwood Capital. Yeah, have a great one. See you later. Bye.